This is the most popular law right now about the tax, which everyone is clamoring about very clearly online. Money earned as income is what is taxed by the new tax law. Have you heard about the new tax act that is going to be taking effect in 2026? That is the Nigerian Tax Act that will be taking effect in 2026. You must have heard a few things on it online already. There's a lot going on online about it, and in case you haven't, well, now you know. I'm going to be telling you a few things, vital and very important things that you should know about it as a Nigerian, as an individual, as a business person, a content creator. As long as you are a Nigerian, you should know about this. So everyone should be informed about it. All right, ignorance of the law is never an excuse. So come with me in this video and I will tell you so much that you need to know. My name is Victor. Welcome to my YouTube channel. If this is the first time you're seeing me on this channel, I talk about law, business, finance, fintech, and some other very interesting subject matters. Let's ride together. Basically, what is a tax? Okay, tax in the simplest form is what citizens of a country or a nation pay to the government so that the government can provide basic amenities and infrastructures such as good roads, hospitals, schools, institutions, and many other things that individuals or the people of the country cannot provide for themselves individually as single persons. That is, in the simplest form, what a tax is all about. All right. Now, in the context of the new law that is coming, how did this come about? I'm going to give just a very short background about it before we go right into it. All right. On the 8th day of August 8th, 2023, all right, President Bola Ahmed Tinubu inaugurated a committee, the Presidential Committee on Fiscal Policy and Tax Reforms, led and headed by Mr. Taiwo Oyedele. All right, that was the committee that has been working on the whole tax reforms in Nigeria. Basically, the role of the committee, or the mandate given to the committee, was basically to reform Nigeria's tax laws, harmonize Nigeria's tax system, all right, eliminate multiple taxes. Now, the results from the committee, from the work the committee has been doing for the past 2 years, brought about four new tax laws that were enacted on June 26, 2025. All right. One of the laws, being the principal of them all, is the Nigeria Tax Act. And as a matter of fact, this is the most popular law right now about the tax, which everyone is clamoring about online. The Nigerian Tax Act 2025 is meant to give clarity about the tax system in Nigeria, what taxes are Nigerians meant to pay. The second law that was signed into law by the President on June 26, 2025 is the Nigerian Tax Administration Act. This law defines who collects taxes and how. The third law that was enacted is the Nigerian Revenue Service Establishment Act. The Nigerian Revenue Service Establishment Act. Basically, this law replaces the FIRS with the NRS. So from 1st of January 2026, we will no longer have the Federal Inland Revenue Service Act. As a result of this law, we will now have Nigerian Revenue Service. The fourth law that was enacted on June 26, 2025 is the Joint Revenue Board Establishment Act. The Joint Revenue Board Establishment Act. This act basically expands coordination, facilitates and ensures synchronization and coordination between the federal, state and local government revenue bodies. That is to say, this law brings about synergy between the institutions that receive revenue and taxes and levies and all that, between the state, local government and the federal government. It brings about a harmonization between these three levels. So here are 14 things you need to know about the Nigeria Tax Act 2025. Number one, which Nigerian Tax Act takes effect from 1st of January 2026. Number two is that this act applies to everyone in Nigeria. It applies to everyone in Nigeria, and in some aspects, it applies to Nigerians in diaspora. Okay, so you're a salary earner, you're a business owner in Nigeria, you're a freelancer, you're a content creator, you're a remote worker, you're a trader, you run a company in Nigeria, and controversially, as you have seen online, even agberos, all right, everyone is affected by this law. This new law brings about new rates for personal income tax, known as PIT or pay as you earn. All right, so right now from 1st of January 2026, if you earn between 0 to 800,000 naira annually, that is to say, put together all your income in a year, in 12 months, is between 0 to 800,000 naira, you pay zero taxes. So we have about 5 layers of threshold for personal income tax, as you are going to see on the screen. Okay, 0 to 800 pays 0% taxes. Then if you earn from 801,000 naira to 3 million naira, all right, if you are in this bracket as an income earner, you pay 15% of your income earned. Between 801,000 to 3 million naira, you pay 15%. And if you earn between 3 million and 1 naira to 12 million naira annually, you pay 18% of your income earned. If you earn between 12 million and 1 naira to 25 million naira, you pay 21% of your income earned. If you earn between 25 million and 1 naira to 50 million naira, you pay 23% of your income earned. And if you earn from 50 million and 1 naira and above, you pay 25% of your income earned. If you are a Nigerian and you live abroad, you earn your income abroad, you stay and reside outside Nigeria, you do not pay taxes. This is unlike what many persons have been saying online. Nigerians in the diaspora are affected. Yes, if you're a Nigerian in the diaspora, you do not pay taxes in Nigeria as long as you reside and you work outside Nigeria. Now, the only exception is this: the only time under this new tax law that a Nigerian in diaspora pays taxes is when, for example, you run a business in Nigeria. If you run a business in Nigeria, definitely it is liable for tax. Your income is liable for taxes. Okay? But generally speaking, you do not pay taxes. For example, if you have rental properties in Nigeria, you have a company in Nigeria, personally you have businesses that pay you, you have let's say rental properties, you have houses where you receive rent and all that, and it's in Nigeria, definitely you have to pay taxes. Number 5, only money that is income earned is taxed. This is unlike what is going on online. A lot of persons are saying different things online. You need to get the information very clearly. Money earned as income is what is taxed by the new tax law. So any money that comes into your account that is not income earned is not taxed, such as contributions for a purpose, the weddings, what we call ajo, remittances, monies, gifts, monies that are gifts from family and friends are not taxed. So also, if you're if you're in Nigerian in the diaspora and you send money to your family in Nigeria, that is not taxed. So it is only money that is earned, that is an income earned, that is taxed. And of course, this has to be verifiable when you are doing your tax returns and you are putting in the documents, the figures and all that. You need to state it clearly. This is what this money is for, so that it is not categorized as income earned. Number 6, students do not pay tax. Under the new tax law, students are not meant to pay tax because it is assumed that they are not working. However, the only exemption is where students run businesses, they work as freelancers, they work remotely, then they earn income, then that income is taxed. All right, not stipends that they receive from their parents for their upkeep. Number 7, NGOs, religious organizations, charity institutions do not pay taxes. If you run an NGO, you have a religious institution, churches, mosques, and all that, charity organizations are not liable to taxes. Okay. Now, this does not mean they are not going to file their returns, tax returns, and all that, but their income is not taxable. Now, the only exception is this: if you have an NGO, for instance, and you do businesses that bring in income for the NGO, then that is going to be taxed. Aside from that, religious institutions, NGOs, charitable organizations are not liable to taxation under the new tax law. Number 8, loans are not taxable. Just like I said previously, only money that is earned as an income. Loan is not an income, all right? So it is not taxed, okay? However, the company, for instance, the institution that gives the loan and receives interest on the loan is going to pay tax on the interest, okay? But ordinarily speaking, loans are not taxed. Number 9, the kind of business structure that you run will determine the kind of tax that you pay. If you have a business and it is registered as a business name, you run it as an enterprise only, the kind of tax you pay is different from a business that is registered as a company. All right, I actually have a video that talks about the benefits of registering a company right now under the new tax law. So if you run a business as a sole proprietor, it's basically an enterprise. Even though it is registered as a business name, you are going to pay personal income tax on your income earned, of course, after the allowable deductions. Okay. However, if you register your business as a company and you run it as a company, okay, you do not pay company income tax, CIT, for your income from 0 to 50 million naira. Now, this law defines small companies as any company that has an annual turnover of 0 to 50 million naira. If you run a company and you have an annual turnover of between 0 to 50 million naira, and also your assets put together is not more than 250 million naira in valuation, then you do not pay taxes. You are classified as a small company. Now, this is contradictory to what has been going on, many of the information going on online. Many people are saying 100 million naira, from zero, if your company earns between 0 to 100 million naira, you are not taxed. That is not true. The law says 0 to 50 million naira. That is why you need to pay attention and be careful to what you hear about what you hear online. Okay, not everything you hear online is true. What the law says is 0 to 50 million naira, okay, plus the fact that your asset valuation, your property of your business, the property of your business is not more than 250 million naira. These go together. If you qualify under these criteria, then you do not pay taxes. You must know that this does not apply to professionals. So professionals are not classified as small companies, lawyers, accountants, people who offer professional services. They are not classified as small companies, so they do not enjoy this benefit. Number 10, if you invest in shares in Nigeria, you enjoy a lot of tax exemption. How does this apply? All right. So if you sell a total shares in 1 year, not more than 150 million naira. That is to say, if all you do in the capital market, selling shares, buying and selling shares, is only up to 150 million naira, it's not more than 150 million naira, you do not pay taxes. Okay, and if your gain is not more than 10 million naira, you do not pay taxes. So that is, if you do everything in the share space, okay, less than 150 million, and or your gain is 10 million below, you are exempted from paying taxes on it, on the income you earn from that. However, there is an exception. If your income is more than the 10 million and all you do is also more in the share space, that is to say, all you do in the share space is more than 150 million naira per year, it will be liable to taxes. The only time you will not pay taxes on it is if it is reinvested in Nigeria. This list shares. Number 11 on this list, there are certain kinds of incomes and groups of persons that are not liable to taxes under the new tax law. Number 1, the salaries of military personnel are not liable to taxes. Okay, retirement benefits for pensioners are not taxed. Gains from selling personal effects up to 5 million naira, you are not taxed on it. When you sell your house, residential property where you live in, you do not pay taxes on it, and this is available just for one lifetime. Okay, that is to say, it happens once in a lifetime. Okay, then compensations are not liable to taxes if they are less than 50 million naira. For example, compensation of loss of job, that's to say, compensation that is paid to an employee for losing a job and all that, as long as it is less than 50 million naira or 0 to 50 million naira, is not taxable. If you run an agricultural company, you enjoy tax holiday starting from January 1st next year for 5 years. So agricultural companies, especially those who are into crop production, livestock, dairy, forestry, they are exempt from tax for 5 years. That is to say, they are not paying CIT for 5 years. All right, 5 good years. That is very encouraging. That is one of the beautiful things about this act. So the government is trying to encourage people to invest and go more into agriculture. Now, another interesting thing is that income from federal and state government bonds is exempt from tax. That is to say, if you invest in federal government bonds and state government bonds, you are not going to be paying taxes on your returns. So number 12, if you live in Nigeria but you work remotely, okay, you work from Nigeria for a foreign company, okay, you're a freelancer, whatever it is that you do, but you work remotely, however you are in Nigeria, you will pay taxes on your income. Whatever is paid to you for employment, okay, by that foreign company, you are going to pay taxes on it in Nigeria. Okay, you pay taxes on it in Nigeria. The only exemption is if the foreign company had deducted taxes from what you are paid. That is to say, if you work for a foreign company and you are in Nigeria and they deduct taxes from your salary or the income earned where the company is, then you will not be subject to double taxation in Nigeria. And of course, that has to be proved. You have to show that you have been already taxed, okay, in the country where you get your income. Number 13. Here are some of the tax reliefs in the new tax law that you should be aware of. They are called allowable deductions. So for your personal income tax, here are the allowable deductions that will not be taxed. Okay, that means they can be deducted before tax. All right, pension contributions. If you are part of a pension scheme, it is an allowable deduction which will not be subject to tax. National health insurance scheme, your contributions for the national health insurance scheme is an allowable deduction before tax. Interest on loans for your home, that is to say you have a residence and you had probably obtained mortgage for it. Okay, your annual or your monthly interest payment, the payment you make for that arrangement, is an allowable deduction before tax. All right, and also life insurance or annuity for you and a spouse is an allowable tax deduction. And then also there is a new introduction by the new tax law. One of the allowable deductions is 20% for rent relief. 20% of rent relief, or not more than 500,000 naira. So here is how it applies. 20% of your annual rent is an allowable tax deduction, but that 20% must not be more than 500,000 naira cumulatively. So that is to say, if your rent is up to or less than 500,000 naira, it is an allowable deduction. But if in calculating the 20%, it is more than 500,000 naira, only the 500,000 naira will be allowable from it as a tax deduction. This new tax law now has broadened, okay, VAT, that is value added taxes, for certain services and for certain goods. Okay, you will find a list of some of these goods and services on your screen. Baby products, VAT has been removed on a couple of products and services, as you will find on. All right, here is my opinion about the new tax law. Okay, it brings in very good initiatives. Okay, there are good initiatives that this tax law brings, even though I have my reservations about some of them, which I will talk about in this video and in subsequent videos. All right, but to be honest, there are good things about this new tax law. Talking about the rent relief, the allowable deductions, talking about the 0% for small companies that earn between 0 to 50 million naira as annual turnover, they're exempt from taxes. Talking about the 5-year tax holiday for agricultural companies. I mean, these provisions help to boost the economy. They help to make the business environment and economic environment in Nigeria, okay, more hospitable for growing businesses. This law actually has provisions that encourages, okay, business growth. Also, this law has reduced or taken away tax burden on very low income earners, like the explanation I made earlier, where you earn between 0 to 800,000 naira in a year. You pay no taxes. You do not pay any personal income tax. Okay. Well, for my reservations, I think the threshold for small companies could have been more. It could have been more than 50 million naira. It could have been like 100 million or 150 million annual turnover could have been subjected to no percent, no taxation at all. That is one of the things I think could have been done better. All right, I have videos where I'm going to talk about more things, do more critical analysis about the new tax law taking effect from January 1st, 2026. All right, so as an individual, now you know these things. What are the things you must do? One, you must keep proper financial records of your income, of your expenses, of your transactions. Keep proper financial records. If you have not been doing so before, now you need to take documentation of your financial transactions more serious. Another thing you need to do is that you need to put the right and proper descriptions in your transactions. Okay, you need to put the proper descriptions in your transactions. If you are sending money for a particular purpose, especially if it is not an income earned. You need to state it, because when you are filing your returns, these are the things you are going to be uploading, and these are the things that the tax institutions will look at to determine if you are doing the right thing in terms of your tax. Okay, some of you may even need to get tax professionals. You may need to get consultation with tax accountants or legal personnel who are tax consultants. Another thing you need to do is this: if you do not have a tax ID, you need to get it. If you have a tax identification number already for your company, for your business, or for yourself, you do not need to get another one. But if you do not, you need to get a tax ID. All right, in subsequent videos, I'm going to do explanations on how you can go about this. So for personal income tax, you need to be registered with the revenue collecting institution of the state where you reside. So you pay personal income tax where you reside, where you lay your head, and of course that's where you get your tax ID or your tax identification number. And I also want to say that desist from thinking that you are going to evade the system. Before now, lots of Nigerians have not been paying taxes. A lot of Nigerians have not been paying taxes. But now, the regime, the tax regime taking place from January 1st, 2026 is more compact. Okay, they have put a lot of system in place that is going to make it very, very difficult for anybody to evade taxes. Talk about the BVN, talk about the NIN. Okay, it's going to be very difficult for you to evade taxes. All over, everywhere in the world, when it comes to taxes, nobody likes taxes. Nobody likes to pay taxes. The natural response for tax payment is evasion or avoidance for anywhere in the world. All right. So with this that you know, tell me, what is your take? What do you think about this new tax law? Is it fair? What are the things you've heard about it? And let me know, what are the things you would want me to discuss or talk about the new tax law. You can leave your questions and comments down below in the comment section. All right, watch out for my other videos about this new tax law, and I will see you in my next video. Please make sure to like, subscribe, and share. A lot of persons need to know about what is coming for next year, so please share this video to as many people as possible. Thank you very much. See you in my next video.